No matter your age, your plan for retirement can start today. From the News Channel 5 Network, this is the Retirement Report.
Good morning. Welcome to the Retirement Report. I'm Hank Parrott, your host. Got a great show. You know, one of the things I've been doing over the holidays is kind of looking at all the different articles and studies that come out. There's a lot of different year-end things that we get, year-end numbers, if you will. And it's kind of interesting. This is also that time of year when we're talking about New Year's resolutions. What are we going to do for the new year? Well, one of those is we're going to get our house in order, right? And as I was looking at a lot of articles and some of the things that were in studies of the market and that, there were those that were saying, you know, batten down the hatches, look out for 2016. And son of a gun, look what happened in the first week of 2016. We got the worst start ever in the stock market, okay, as far as how far down. But by the same token, this isn't a time to like get scared in terms of, oh my God, the sky is falling. It is a good time to reevaluate where you're at currently with regard to your investments. So one of the things that you want to look at when you're looking at a period like this, it's down, I don't know, 5 or 6%, I believe, and I think the futures this morning look like it was going to open up in a positive territory, so we'll see what the day brings if it recaptures some of those losses. But this is something to consider. When you go through a bear market period, and I'm not sure if that's what we may be looking at in 2016, there are those that certainly feel that way, and there are those stocks that are down way beyond bear market period, bear market territory, if you will. So one of the things to look at is your own portfolio. Right, this is a great wake-up call. If I'm down 5%, yeah, I'm not happy about that. It's not something I'd rather be up than, you know, than have my money be losing. I don't want to wake up and, oh wow, there's $500,000 in the market, and now it's, you know, down $25,000 or $50,000. But by the same token, what's a bear market? You might be looking at 20 to 50%. Okay, in the last 15 years, we've had two such bear markets of over 50% drops. So, and there are those, in fact, let's see, Jack Bogle, the founder of Vanguard Funds, has predicted, in fact, that sometime he said this a couple of years ago, that over the next 10 years, so now over the next 7 or 8 years, to expect corrections. He expects 2 more corrections of in that 50%, 30 to 50% territory. So here's the thing, or I should say bear markets versus corrections. Here's the thing to consider with that. How are you currently positioned? If you're down 5%, isn't this a great time to maybe take a look and say, you know, I'm doing what the market is doing. Do I want to modify that some? Is there a way that I can arrange my portfolio, all right, that arrange my investments in such a way to take some downside protection to hedge against further losses? Better to do it when you're down 5 than when you're down 50, right? So that's the way to look at this right now. Is this is a great time because it's kind of in your face, right? Here's it is in the news all the time. Here's what people are talking about. So this is a great time to say, well, where am I at? All right, and we're going to make that easy for you. We're going to talk about some things this morning that have to do not only with the markets and investing, but things like housing. All right, housing expenses make up about 40 to 45%, according to the Employee Benefit Research Institute. There's about 40 to 45% of your expenses that you have for people over 50. Healthcare costs 20% plus. And here's the big one that we can really do something about and is in our minds this time of year: taxes. All right, we're looking at anywhere from, you might be looking at 10 to 50%. Right? Get that last number, 50% or more in taxes are going out. And have you got a plan to reduce those taxes? Do you even understand that there are things that you can do, many things you can do, and some of those related to your investments? Tax efficient investing is another area that, you know, you can be helped in terms of not only improving how much your return, the net return you get to keep, but you can do that by also reducing your taxes. And when you watch your investments and the amount of investment income that gets generated, or taxable income in particular that gets generated, taxable returns, then if you can reduce that down, right, more money you keep, and it could also impact other income that you have in terms of how it's taxed. So taxes are a big part of how you can position yourself to keep more money in your pocket, and that's what it's about. It's not just what you make, it's what you keep. So today we're going to be talking quite a bit about taxes. We're going to be preparing, right, 2015's over, now we get, well, over in the sense that we can't do anything more about, or not much about reducing. We are going to talk about some strategies you can still apply now that you're going to be getting those 1099s, W-2s, other tax things in the mail, dividends and all that. You're going to be seeing what your tax situation is and preparing to file your taxes. Well, I've got a great guest on. My good friend Dr. Friday's on with me today, and we're going to be talking about how you can prepare for tax season as your tax forms are coming in, as your those 1099s and W-2s, what to look for, okay, to make sure there's no errors, make sure you're not going to be paying more than you're required to pay. All right, and we're also going to be talking about 2016, some of the new rules that are going to apply for 2016, as well as some of the Tax Act that got passed at the end of the year that affects the filing for 2015 taxes. So a lot of things we're going to help you with. And so what's one of the good New Year's resolutions? How about I'm going to really take a look at my financial plan, okay? I'm going to look at my investments. I'm going to look at my overall plan, my budget. I know it's that, no one likes that word, right? It's like dieting.
Exactly.
Who wants to do that? So let's talk about lifestyle expenses. Let's say,
good answer.
You know, what is my lifestyle? What's it cost to maintain my standard of living and quality of life right now? And I want to be able to do that, all right? I want to maintain it, maybe even improve upon it, and certainly want to be able to do that when I retire and those paychecks go away. I want to make sure that I can maintain my standard of living and quality of life for as long as I might live, take care of my family, all those financial goals I might have. We're going to help you with that. For the first 10 callers to my office this morning at 615-376-5325. Debbie's standing by. She'll to take your calls. Now, sometimes we get a lot of calls. If you may go over to the service, it shows she'll call you right back. But for the first 10 callers, 615-376-5325, going to provide you a free retirement income analysis. Well, what is all involved in that? One of it is taxes. You know, what are you paying currently in taxes? We'll show you how to reduce your taxes, how to get the most out of Social Security, how to get the most out of your investments, how to make that transition from growth to income when it comes to pulling money out of your investments or retirement accounts in retirement, how to take a look at things like, understanding required minimum distributions, Roths and Roth conversions, all of the things that can have a huge impact on you in terms of both how much money you make as well as, again, how much you get to keep by reducing taxes. Another thing I'm going to do is I'm going to send you a little checklist of things to bring to the appointment. And guess what? Dr. Friday will attend, okay? So if you would like to schedule a time where you can see both of us together to go over your taxes as well as your finances and investments, this is a great opportunity for you to do that. And I'll send you out a copy of my book, 7 Steps to Financial Freedom and Retirement, for those first 10 callers as well. All right, and that lays out a lot of great information for you, including IRA mastery and other strategies in that chapter about how to reduce taxes. Okay. So let's talk about some of the new things that have happened. Now, we did get some good news, right, with the new Tax Act, some things that were extended at least.
And they were extended for 2 years. As you know, the last couple of years, they've extended them, but by the time we received it, it was only, to the end of that same year. So every year we've been working. So what's great is we know what's happening in 16. I mean, they may make some other changes for us, but we know right now that we have the extension for the required minimum distribution contribution to charity, for example. We know we have the sales tax. Yeah, because a lot of people, because they don't know if it's going to happen, don't do it.
Right.
Which means that they're missing out on quite a bit of tax dollars, especially for people that are in retirement, because a lot of times their contributions don't actually add up to enough to itemize, right? So they basically lose out on it.
It's one time finally Congress didn't just patch it and keep us all on the edge of our seats. Now what's going to happen next year? Now what's going to at least we know now for
all
filing
the way through
2015 and 2016, we know what we're dealing with.
We can actually do some physical tax planning, what I mean, and see what we're going to get, which is awesome. And then hopefully, knock on wood, they'll actually take this year and make some permanent tax, laws so that we can actually say this is what we're going to be able to do for a period of time.
So for those that don't know, the qualified charitable deduction, that
It's a great one because if you're over the age of 70 and a half and you have to take the required minimum distribution, we call it RMD, but it's required minimum distribution, and you had to take that by December 31st, there is always an exception to that, but most people have to take it by December 31st, I'll just put it that way. Yep. And if you had actually called them and said, hey, I would like to take, you know, 5,000 of that and send it to my church or send it to a charitable 501c3, they send it directly, then what happens is it's tax-free to you. Where normally you give to charity, you have to itemize and then it becomes an exemption and you don't actually get it because most of those people are taking the standard deduction. So they get it anyways. So this is a great way. And if you're at the 10% tax bracket, you gave $5,000, you just saved $1,000 or $500 in money in your pocket. You just put $500 in your pocket.
For doing something you were going to do anyway.
Exactly.
Just a better way to do it. And this goes to the same concept. When we're talking about required minimum distributions, at age 70 and a half, if you have an IRA or a 401k, and now you're retired, okay, if you're, the exception being on the 401k, if you're still working at the company where you have the 401k and you're over 70 and a half, you actually don't have to take that RMD for that particular account. But if you have other IRAs or 401ks from other employers, you would in fact still have to take that. So that required minimum distribution, I'm going to talk about a little more when we come back from the break, because there's a lot of things you can, there are some strategies, a lot of strategies in fact that we utilize when it comes to required minimum distributions with regard to both income as well as ways to reduce your taxes for that money that you have, that the IRS requires you to take out. So we'll talk about that more and much more this morning. Join us here. We'll be right back on a Retirement Report.